What is up, everybody? I'm joined right now by David Kemmerer, co-founder and CEO of CoinLedger, the #1 crypto tax software. Many of you have heard of it. Over 500,000 customers. It is my favorite, and we have an urgent IRS update. And I know YouTubers like to throw that word around, urgent, a lot, but this really is this is an update that's days away. So there's absolutely no better time than right now to have David on the channel to really help in terms of guiding us through what is going on. So David, welcome to the channel. Thanks for sponsoring the video today.
Yeah, thanks for having us. It's timely, as you said, tax season around the corner, so it's good to be here.
All right, so there's headlines all over the place. In the simplest of terms, I guess what's from a high level, and then we can kind of dig into it a little bit more, but like what's going on right now? What's happening come 2025?
Yeah, as you mentioned, there's been a ton of headlines. A lot of YouTubers have talked about this, so we wanted to touch base and try to help people get just a better understanding of what's going on. So starting at a high level, the IRS, so specific for U.S. crypto investors, are essentially just changing the way that you need to account for your gains and losses from your crypto investing activity. And essentially, they're switching from allowing folks to use what's known as a universal wallet or account tracking method to a specific, by per account or per wallet method. And again, at a high level, this is just going to cause some problems and a little bit of confusion for folks. And so I think it's helpful to talk through some of those changes and just better equip people to be ready for those changes so that, they're not caught off guard for tax year 2025, which again isn't until next year, but all of these changes go into place Jan 1, 2025.
Okay. So would you say the per wallet accounting is like the biggest change that's happening?
Yes. And the reason you're hearing about it now is because before the end of the year, as the IRS put out in the revenue procedure 2024-28, you have to declare the method by which you are going to migrate to per wallet or per account cost basis tracking. And so that's why a lot of people are ringing bells being like, hey, you need to be on top of this before the end of the year, because essentially you need to declare, how am I going to switch my accounting practices to this new method? Of course, tax software companies like CoinLedger are doing this on behalf of our users. But if you have an accountant or a tax guy that you've used in the past, you want to get on the same page with them and make sure that they're ready and they're able to help your record keeping, adjust to this new requirement.
So you're saying method, like historically or traditionally, like what are the methods that crypto people have been using over the years so
Yeah,
far?
great question. So I'd say 90 to 95% of US crypto investors and over the globe, but let's stick with US right now, are tracking their gains and losses on a universal method. And all I mean by this is, let's say I have multiple accounts. Let's say I have a Coinbase account, a MetaMask wallet, and maybe also like a Kraken account. Okay. And I have across those three accounts or wallets, I have buys and sells, transfers between them, interacting maybe with DeFi protocols through MetaMask, and different buys and sells on Kraken. In under the universal method, which again, like I mentioned, 90% of crypto investors have been using in the past, you can account for the sales irrespective of what platform or wallet the original purchase happened. So let's just make this very simple. Let's say I originally had a $10,000 Bitcoin purchase on Coinbase, and I moved that Bitcoin at some point over to Kraken and transacted there. Under the old method, you would take all of those transactions and put them into one queue, essentially as if you only have one wallet or account. And then when you sell Bitcoin, you can pull the cost basis from any of those platforms where you originally maybe bought Bitcoin. In this case, it was Coinbase. Moving forward, the IRS is making you report gains and losses solely by platform. So you can no longer take cost basis from Kraken and sell that from an accounting perspective on Coinbase. It's completely walled off. And so this conceptually doesn't seem like a big deal to folks. They're like, oh yeah, that makes sense. And it does, right? That I'm going to report my gains and losses based on, what happened in Kraken and what happened in MetaMask. The problem is, for any accountant or anyone who's interacted with cryptocurrency data, it can be very difficult to track every single transfer, fee, movement of crypto across all of your accounts. And so this can make it very difficult to actually track your basis as it moves between wallets, so that when you sell crypto on one account, you have accurate records of the basis on that account. Hopefully that was a decent explanation.
Yeah, but so
But yeah,
basically, like if you bought on Coinbase 10,000, moved it to Kraken, and then sold it on Kraken, you can't just trust now that like Kraken's gonna give you the data you need to track that it moved across exchanges. You know what I'm saying? Like, because that's
exactly.
the problem. I feel like it's gonna like just
In
show
the
that you sold
happy
10,000, but you never bought it. Like,
Exactly. In the happy path, you have all that data and your records are clean, and and your transfer perfectly shows over to Kraken. And so
yeah,
when you sell that Bitcoin on Kraken, you can perfectly say, okay, I sold at 20,000, my basis is 10,000, and thus I have a 10,000 gain on Kraken. But the reality is many crypto investors are missing a lot of that transaction history, or they haven't been keeping perfect records. And so when they go to sell on Kraken, they may not have record of that Bitcoin transfer coming over. Again, that's a super oversimplified example, because imagine you have thousands of transactions,
exactly.
potentially across dozens of wallets, like as we know many investors do. You really need to have very clean data so that you can account for things, again, now on a per account basis. And so, as a lot of accounts are describing, it's essentially as if you formerly, under the universal method, had kind of one book that you had to keep track of. Now you have to maintain, separate books for every single wallet and make sure they all perfectly tie out. Um, and so again, that's going to be required going forward here in 2025.
Man, so okay. So this isn't like, I think a lot of people when they're like, hey, warning, IRS change, pay your taxes, get on top of it. Obviously you want to do that. You don't want to underpay your taxes or miss something in that regard. But the risk here also could be, it seems like if you don't have this data tracked properly, you could overpay your taxes like by a lot.
That's going to be the biggest thing, because let's rewind just a little bit. I don't want to get too technical for folks, but they can ask, why is this happening? And the
Yeah.
reason why this is happening is because back in 2021, actually, the IRS came out and said, hey, exchanges out there, we are going to make you report on your customers' transactions to us so that we can get a better sense of income that's happening in the crypto space. Essentially, they said, hey, this is required of stockbrokers, right? If you have an E-Trade account or a Robinhood account, you're probably accustomed to receiving a 1099 at the end of the year detailing the gains and losses that happened on that platform. The IRS is saying, hey, cryptocurrency exchanges, you're also going to have to do this. Now, the trouble, right, is now in 2025, cryptocurrency exchanges are going to have to start reporting your gains and losses on what's known as 1099 DA, which stands for digital asset. You will receive one of those 1099s at the end of the year, and the IRS will receive a copy. The problem is, again, if your exchange doesn't have the cost basis of your holdings, they're just going to report on, hey, Dan, you sold $1 million of Bitcoin, and that's what we told the IRS, right? That's what
Yeah.
Coinbase will send in the 1099 digital asset. And it's up to you to prove what the basis of that $1 million of sales was. Maybe your basis is $999,000, right? And you had $1 of taxable gain, right? It's still up to you to prove that. And so you need to be keeping, your books straight so that when you get these 1099s a year from now, they tie out with your books and with what the exchange is reporting to the IRS. And so that is why the IRS is saying, hey, everyone needs to move to a per account gains and losses reporting method, because we need this to tie out to the 1099s that we're making the exchanges send to us starting, in 2025.
Wow. Okay, so I mean, 2025 is days away. So, like, what
Yes.
what could people
So
that are watching this video start doing right now?
yeah, and so I can maybe share my screen just to hit on this. But we have a pretty simple blog post that might be helpful for people. But the question is, what do I have to do before the end of the year? And so the IRS, put out Revenue Procedure 2024-28 that I'm highlighting if you can see my screen. And in that, it essentially says, hey, before the end of the year, taxpayer, you have to declare how you're moving your books, that we're tracking everything from a universal accounting method, and how you're moving to a per wallet or per account accounting method. And they allow essentially two methods to allow for this reallocation of basis. You can specifically identify all of your outstanding holdings and essentially show the IRS where you're allocating that basis across the wallet you own. Or you can use kind of what's known as a global allocation method. It's more of an algorithmic approach. This is the approach that CoinLedger is, offering to our users, which is essentially going based off a rule. We're saying, hey, for any outstanding basis for the assets you currently hold, we're going to assign them to your current wallets or your current accounts based on a lowest cost, highest balance algorithm. Much more of that information in this blog, as well as in this help article that could be helpful, dives into all the details as well as examples of how this is going to happen. But essentially, you, the taxpayer, have to, and I'll stop sharing my screen now for a second. You, as the taxpayer, have to declare this before the end of the year. And so that's why you're hearing a lot of alarm bells around this right now.
Yeah. So what, like, I imagine there's probably a lot of people. I think there's just a lot of people before this rule change or this thing is even happening that are just like, they don't have a firm grasp on their tax data for crypto. But like, what should users do that they're lacking like all this historical data for all these wallets and exchanges? Because I'm blown away in my, like, when I log into my CoinLedger account or something and I actually see all the accounts and wallets hooked up, I forget that I have like so many. It's ridiculous. So what can
Mm-hmm.
people do to start gathering that historical data to start organizing this?
Yeah. So a couple things, then I can dive more into specifically CoinLedger. But what we would recommend everyone is before the end of the year, make sure that your accounting records are updated through 2024. And then two, declare which cost basis allocation method you're going to use. And you can do this just by, a lot of accountants will recommend emailing yourself what method you're going to use. CoinLedger sent an email to all of our US users stating how we're going to migrate their basis so they can just save that for their records. But you just need something that's timestamped saying, hey, this is what I'm going to do to migrate to these new requirements. Again,
I see.
CoinLedger is automatically doing that for our users. And then if you're doing this by hand or you have an accountant, again, work with them to make sure you accurately allocate your tax lots to your outstanding wallets. And if you use a crypto tax software platform like CoinLedger, make sure your wallets are synced and your transactions are imported through the end of the year. And I can show just kind of what CoinLedger looks like from that perspective. And
Real
then
quick,
if there's any
that declaration is like a key thing right now that that's like people need to do that. Like
the
that's
main
the
thing.
big thing. Yeah.
And you don't need to send anything to the IRS. You just need to have some type of statement report stating this is how I am allocating my outstanding basis to the current wallets that I hold.
Okay.
And again, a lot of accounts are recommending you email yourself a copy of that declaration so it's time stamped. And if anyone does ever have any questions, IRS comes knocking, you can show them, hey, here's the method that I am using and used to switch to this new required accounting system.
Okay, cool. All right. And then you
Yeah.
said you're going to,
Yeah. So, real briefly, then, so that's again what's kind of being required and what's changing. We're happy to answer questions if people do have questions, which I know they will.
yeah.
We staff a bunch of really good support folks, so just hit us up, which is help@coinledger.io. But jumping in again, as we mentioned, many people have multiple accounts, multiple wallets, and so what you'll want to do in a platform like CoinLedger is, you import all of your transactions from those accounts, and you can do this just, in a handful of button clicks. Then you'll have all of that transaction history imported, and then you can, track all of your gains and losses across all of those platforms and drill into every single transaction and actually see, okay, what is my gain and loss back in 2018? Or, if I flip that, my most recent activity, all of that's fully tracked. We track the basis, the fees associated with every trade, and, build the associated accounting records from that data. And then, you can generate the tax reports that you need really with the click of a button. The IRS forms are auto generated for you. You can drill into exactly how, the platform is calculating your gains and losses for the year. And with these new changes, as long as you're importing all of that data, CoinLedger will be able to track your gains and losses again on a per account level. And so, Dan, we've worked with you for a number of years now, so faithful CoinLedger customer. But that's kind of the new requirements and how CoinLedger will kind of map to them in 2025 and years beyond.
so all the data tracking, like you're scrolling through all these pages, like all of this data tracking is now it's updated and taking into account everything like these changes that are taking place, basically.
Exactly. It'll actually get updated at the end of the year. So, as I mentioned, Jan 1, 2025, based on the global allocation method that I mentioned, which is lowest cost, highest balance, will allocate US users basis to their accounts or wallets that they have synced with CoinLedger. And then from a go forward basis, they'll be able to track um, on a per account level. So, on the back end, stuff is changing, but to the user of CoinLedger, the platform will stay the same. It's just on the back end, we're accounting for things differently.
Okay. This new like per wallet accounting, does it have any impact on like tax loss harvesting? I know a lot of people in crypto have been kind of using that. Does it make any difference to that now, or will it have an impact?
Not from just like a tax rules perspective. Tax loss harvesting will still be a great strategy, still fully permissible. It's still very effective for cryptocurrency investors. It's just, again, you'll have to tax loss harvest on a per account level. So let's say you have low cost Bitcoin in Coinbase. Okay. And let's say you also have a Gemini account where maybe you purchased Bitcoin more recently, so it has a higher cost basis. If you want to tax loss harvest that Bitcoin, you need to sell on Coinbase because that's where your low cost basis Bitcoin is. You no longer can just sell anywhere and decide, oh, I'm going to take
Ah,
from the tranche that's being held, quote unquote, on Coinbase. You actually will need to tax loss harvest based on where your low basis assets are or transfer them to wherever you want to sell. So hopefully that makes sense.
it does actually, because that's like I think that's pretty key info. So
Yeah.
what about like say somebody's got like a bunch of Bitcoin from 10 years ago, right?
Mhm.
And they've been accumulating over the years. So what you're saying is they can no longer just say from a global perspective of all their accounts, hey, I'm going to sell some Bitcoin in Coinbase and I'm going to use it from the offline wallets that I haven't touched in 10 years. They would actually have to go into those offline wallets and send that Bitcoin to an exchange and sell that Bitcoin. right?
Exactly, because no longer from just a pure accounting sense can the accountant, ex ante after the fact go back and just account for, oh, this is the lot I'm going to pull from this sale. It literally actually has to match reality now. So to your exact point, if you do want to sell some of that Bitcoin that you've held on to forever in your Ledger wallet, you need to physically, transfer it over to Coinbase and sell it. And that way the actual basis that's being held on Ledger will come with it, and then you can sell it on Coinbase, and
Oh.
you'd realize a large gain there.
And same with
Also,
ADA, like any crypto. Like I can't just
backwards, but the same
no,
logic
but it makes
applies.
sense. Yeah.
Yeah,
Okay. So yeah, I can't just sell like I can't just, if I wanted to sell ADA, I can't just say, hey, I'm selling ADA that's been sitting in my ledger for years and I'm going to sell what I have in my Coinbase account. I have to specifically take it out of it applies to every single crypto. It's crazy.
exactly. And that's again in the 2025 year.
Yeah.
Right now is this window where you can reallocate basis across your wallets without moving stuff. And that's what this allocation window is before the end of the year. And
Okay.
that's the declaration, right? I'm declaring that my current basis that I'm holding in this universal wallet, I'm sending some over to Coinbase. I'm sending this lot to my Gemini. I'm sending this lot to my MetaMask. And as of December 31st, 2024, that's where my stuff is. And then going forward, everything is on a per account system.
Okay. And that needs to be done like before the new year.
That's right. There's some nuance. It can also be done before your first transaction in 2025.
Yeah.
I would encourage people to read the revenue procedure because there is a little bit of nuance, or just work with your tax professional, or come chat with us at CoinLedger and we can help you. But at its simplest form, yes, this needs to be done before the end of the year.
So it's not like, hey, a year from now when you start working on your 2025 taxes, you can update this and do this. You have to do it now, basically.
Right.
Do you know
By
why
the letter,
yeah.
which I think is terrible. It was done so bad. It's clearly written by people who have no idea what they're doing,
Yeah.
because it would make much more sense to make this be a requirement to be done 1 year from now. But, they're saying, nope, it needs to be done by December 1, 2024. Excuse me, December 31st.
Do you know why, like, all of a sudden they're changing to this per wallet, like, accounting? Is there a specific reason? Because I think I heard you say it does make sense. So, like, what?
It's to map to the sister regulation, which is the 1099 DA requirements for the brokers themselves. So as of January 1st this year, this doesn't apply to you, the taxpayer. It applies to the businesses like the Coinbases and the Geminis. For the first time this year, by law, they are going to have to track all of your transactions and send those gains and losses associated with it to the IRS. Now, if I'm Gemini, I only have data on the user from the transactions that happen within my walls of Gemini, right? I don't know what the user is doing with the crypto that they have on MetaMask or within their Ledger wallet. And so the 1099 DA that Gemini is going to send to the IRS a year from now, and they will also send you a copy of that 1099. That's how the 1099 information reporting system works. That document will have to be scoped to just what happens on Gemini. And so the IRS wants to make sure that the taxpayers' records and how they are accounting for their gains and losses in crypto match the 1099 that they're going to be receiving from their exchanges. And if they didn't force taxpayers to report gains and losses on a per account basis, let's say they still allowed universal tracking, all these 1099s that they're going to be getting from Coinbase and Gemini and Kraken next year would be useless to them, because they'd see, oh, David has made 10,000 on Coinbase as reported by Coinbase. He's made 30,000 on Gemini, but his own records, don't match those 1099s we're getting. He's saying that actually the Bitcoin he sold on February 12th, 2025 was from this lot of Bitcoin that doesn't match what Coinbase said it was from. And so you can see if they did continue to allow the universal tracking method, the 1099s that they're forcing the exchanges to give them wouldn't be super helpful for them from a tax enforcement perspective. And so that's why they're requiring this change. Hopefully that makes sense and I didn't get too in the weeds.
No, it does. It does make sense. So there's going to be, I imagine, a lot of maybe some discrepancies, I guess, when it comes to like incomplete data from like transferring between wallets and stuff. Does And that's just, I can't, like, even trying to picture doing that manually and figuring all of that out. Does CoinLedger help with that?
Yes, exactly. And that's where the rub is this is going to be such a cluster and it's going to be such a headache because so much of the data, even though the IRS has good intentions and at face value what they're doing makes sense, the reality is this data is so fragmented and so hard to get perfectly. I've been in this world for 7 years working with crypto data, that there's going to be discrepancies, and CoinLedger is built and will continue to be built to make it as easy as possible for users to find those discrepancies, to solve those discrepancies, and to effectively account for everything that happened. But inevitably, there's challenges that come with that.
Yeah. I just saw this question. I thought it was helpful because I know there's a ton of people in crypto at stake, and it's just like, and maybe it has nothing to do with it really, or maybe it does, but how do we deal with staking and how will this affect future staking?
Yeah, so the tax implications don't change, but again, now everything's going to be recorded on a per account level. So let's say you're staking, and I don't intimately know the staking mechanisms on Cardano, but I know, Dan, you and a lot of your community do that. But let's say you have a wallet that is getting staking rewards, ADA staking rewards. From how staking works is as soon as they hit your wallet and you have control over those assets, you realize income at the fair market value of the ADA when it hits your wallet. Okay. That income that you realized becomes your basis in the asset moving forward. So for simplicity's sake, let's say I received 10 ADA on July 1st in staking rewards. And at that time, that 10 ADA, let's say, is worth like $20. I realized $20 of income, and that's called ordinary income. And then that's my basis in that 10 ADA. And so let's say I transfer that 10 ADA to Coinbase a year later and I sell it for $40. I need to mark that transfer from my ADA wallet to Coinbase so that the basis can be transferred with it, which is $20. And then if I sell it for $40, I realize a $20 capital gain on that sale. And so again, it's not that the taxability is changing. It's just that hitting on how important the record keeping is, because let's say you don't have record of that transfer when you transferred the $20 over to Coinbase. All Coinbase is going to send to the IRS via this 1099 is that, hey, you sold $40 of ADA. That looks like $40 of income to the IRS. But no, you need to prove that. No. I actually have $20 of basis in that asset. So I don't owe you XYZ dollars. I actually owe you this much. And so that's why that gets important.
Okay, makes sense. So what if somebody's out there and they're like, you know what, this is like, I can't stand the IRS. I'm so tired, because I think people do that. They're just so tired of it, and they kind of, rebel against the system a little bit, which I very much discourage doing that. But if they are like that, I'm not even going to change anything. I'm going to continue to do what I'm doing. What are the consequences? Like not, complying with these new requirements.
Yeah. And I'm with that. It's even for us, we've been doing this for a long time. It's confusing and so
Yeah.
much. It's just like, this is stupid. What are the consequences? Impossible to say definitively, but it's the same consequences that you would face for not accurately reporting other forms of income. And so that falls under the tax evasion world, which can come with prison sentences, massive fines. Whether we like it or not, the U.S. has a monopoly on that world of tax enforcement, and if you break the law, you're subject to the penalties of that.
Yep. Yep. Follow the law. Do your taxes. I mean, I've been saying that like every year when we're talking about these things. Like, just do your taxes. Plan. Like, plan all of your decisions around doing your taxes. Here's another good question. How long does this process take? Because I think this, like, because it sounds complicated and people are probably like, how long is it going to take me? And is it simplified as to how to continue? Does it walk you through step by step?
Mhm.
I think he's referring maybe to CoinLedger in that regard, walking through
How
that.
long does this process take? It's going to be different for different folks. If you have, frankly, a lot of transaction history and dozens of wallets, it can take a good amount of time. Um, if you have 1, 2 wallets, it's going to be a lot faster. Um, that's just the reality. If you, and then that's the second part of the question: does it walk you through step by step? Yep, CoinLedger is built to handhold. And a lot of the platform and the UX around it is assisting users in importing data, making sure things tie out, troubleshooting anything that might be missing. But again, if you have a lot of activity and things are complex, it can take a good amount of time.
Yeah. I have a super chat question. Thanks for the super chat. But Eric says, why doesn't the US just use an average cost basis like they do for mutual funds? Just use your average position you accumulated over the years. Is that kind of like what it's been, like a global type of, or how would you
Not
answer
quite.
that?
So
No.
Canada uses like an average basis. My answer to that is I think that'd be a great idea, but they don't. They
Yeah.
use FIFO as the inventory method, which is not average cost. Um, and so you'd have to take that up with the feds of why don't you just simplify this, and maybe they could give you a good answer, but I don't have a great answer of why can't we just use our average basis.
Yeah. I think there's a lot of questions like that. Like, why do they do anything they,
Right.
and none of us know.
Right. Me neither.
Okay. Okay. So I guess with this, I mean, are there any other crucial points that you think people should know in relation to this change?
No, I think we hit on it actually pretty well. I know there's going to be specific questions. So if folks do have specific questions and they want to drop them in the comments of this video, I'll have my team monitor that and we'll jump in and answer questions to the extent that we can. And then if you do need help, feel free to reach out to us. It's, on our website, easy to find, coinledger.io. We'll also be there to help. We have a bunch of content that walks through all this in more detail that we can link. But I do think that was a good synopsis of what's happening and kind of how to prepare.
Cool. And real quick, you still have your screen up, right?
I do. Yep.
Yeah. Can you just like go to that accounts page again and real briefly from like a surface level just show what CoinLedger is doing like from a data aggregation perspective, like and how it does make it very seamless? Because
Yeah.
that's what the complicated part of this is, like the data tracking. And
Correct.
it's click of buttons. I know you mentioned already, but I just want to highlight that because it's
Yeah. Yeah. So for CoinLedger, right, you're simply just going to add and sync all of the accounts and wallets that you've used. So, again, if it's MetaMask, all I'm going to do is add a new MetaMask account, and then I'm going to add, my wallet address. And I don't have one on hand right now, but you just add that in, and CoinLedger is going to go out, and this is, the stuff that we've built over the past 7 years, and we're going to go. We index the whole Ethereum blockchain and many others, and we look at that wallet and we see every single thing that wallet did, whether it's a withdrawal, a deposit, interacting with a DeFi protocol like Uniswap, and we'll build up the transaction records based on what's actually happening in that wallet. And once you've imported that, we have all that data. We're tracking that all in CoinLedger. The same with your centralized exchanges, right? You're just going to connect your Coinbases, your Binances, your Krakens, and again, just pull in that information. And as Dan said, it's just clicking buttons, it's connecting accounts, and then we're tracking all of that data for you on a per account level. So, I can filter by just Coinbase and see exactly what happened in Coinbase. These are all part of their, earning activities. This was a buy, and all of the, associated accounting data gets tracked. So this is kind of an accountant's best friend, and you as the user, you can use to track your portfolio, generate the tax reports you need, and again, handle a lot of the heavy lifting on these new annoying rules that the
Yeah.
IRS is coming out with.
Like you have a just one page snapshot of each wallet. You can click, hey, this wallet, this wallet. So now that there's this per wallet accounting in place
Yep.
going into 2025, this is where the snapshot is. So I wanted to highlight that because, I mean, yeah, years ago, that's what sold me on CoinLedger was just your interface and the amount of time that you saved me and the headache of it all. So, cool.
Yep, exactly. So it's very nice for people to have a spot to bring in all of this data, and then again, it can get reported on in whatever way is necessary by law. And so, that's kind of the value prop of us here at the old Coin Ledger.
Yeah, the old coin. You're so humble about it too. I love it, man. I appreciate you coming on the channel and answering these questions. And if you're in the live stream or your replay viewer, hit the link below, get a CoinLedger account, save yourself the hassle. I love them. Over 500,000 crypto investors use them. David, I mean, do you have any parting words as we do get ready to go into the new year?
Yeah, no, I appreciate you having me on and just chatting through some of this. The only thing I just say is if you need help out there, just reach out to us, create an account. And, we have a pretty big team that does nothing all day but help people. So just hit us up. And, thanks again, Dan, for having us on.
Of course, David. Thanks again for coming on, everybody. Smash that like button, subscribe on the way out. See you in the next video. Hit that CoinLedger link below. God bless.